Here is a great example of a wide gap fill zone providing support. It is a strong bearish drop since the market pushes under 44 relatively easily and only begins to reverse around the range's lower boundary near 40, a downtrend from clear resistance. Along the way there is a gap down that is swiftly filled. It essentially acts as a resting phase in a downward continuation. There is the classic bearish surge with high volume for the gap down, then a neutral to bullish range with low volume. Finally, bearish price action and volume return with strength to form a downswing that goes well below the original gap down area. Note, a clear downtrend line can be drawn right on the highest points of the two downswings. In addition, similar to most gap downs, the gap down zone, in this case, has most influence and price action around the gap down candle's real body. That is natural since open and close prices are normally more important and influential in the long term compared to the low and high prices of a candle. It is normal to see more bull hammer candles form around the darker red region, highlighting the gap down candle's real body range. A gap up accelerates the completion of a flat reverse head and shoulders. A decisive break after 3 methods rising price action follows the gap up candle to strongly surge away from the descending trend line. From this zoomed out view, it is also easier to identify the reverse head and shoulders and the gradual transition from a downtrend to an uptrend. Although bearish sentiment is relatively weak in December when compared to the larger spikes in bullish volume and candles, there is the bearish advantage of significant resistance from the previous highs in the mid-70s. Now it is important to see if the lower 70 boundary will hold. Going back to October, the bullish reversal range is technically a reverse head and shoulders, due to the middle swing point being lower than the one before and after it. The pattern is also defined by a horizontal upper boundary for the neckline. However, it could be considered a double bottom since the second and third upswings have closing prices that are relatively in line to form the familiar W shape. A triple bottom is also present if the lower wick of the bull hammer in early October is also counted. Overall, it makes little difference whether the October range is called a reverse head and shoulders, double bottom, or triple bottom. All can technically be correct in this case. All 3 patterns also have a temporary range that is fairly rectangular, especially for a flatter reverse head and shoulders, so it makes less of a difference here. It is a clear area of bullish activity, providing strong support for a major reversal. After a volatile few days, the market settles and the situation is clarified. A double top has been averted. This failed double top range is of high interest as a support range in the case AAXN continues to drop from a recent peak. Here we also see it is cleaner to get rid of the wider gap up zone, and that most activity from the gap up is in the 65 to 63 range. The chart is much less cluttered now. After some rapid fluctuations, the old levels and trend lines still provide useful identification of support and resistance. The mid-70s range is of interest again, as it provides support to halt the gap fill. There was also a flat top reversal that failed to produce a larger drop from April to May. A head and shoulders with asymmetrical proportions was difficult to identify. Even if it wasn't identified, the 8850 level from the high point that became the head is easily seen as a major high from the time. Incidentally, a later gap up almost closes directly on 8850 towards June. Market activity is drawn to major support and resistance. In this case, a strong gap up will still find temporary opposition at a clear and major resistance such as 88.50, even if it is just in the intraday summarized by a single candle. Of all the ranges, the mid-70s range was the focal point of activity, since it was major resistance to the long-term uptrend and the site of several patterns.